Hello everyone, hope you are all doing well. Looking forward to this episode. We'll discuss earnings, what's going on at the moment. We'll talk about the present, we'll talk about the future. We got you covered. And I'm joined today by Josh Gilbert. Josh, how you doing?
Yeah, very well, Sam. We're going to be looking everywhere today, aren't we? A couple of genies looking into the future.
Yeah. Fingers crossed we can get it right. We wasn't too long ago we did a few predictions and we talked about the market, and earnings was absolutely something that certainly in the short to medium term that was important in our decision making for where we think markets will end the second half of the year. So an important time right now to discuss it all. I've just recorded the Daily Voice podcast, and Japan were in the news in other news. They had a trade deal announced by Donald Trump, which is parading everywhere. The Nikkei was up on that news as well. So it's not just the Nikkei that's up. We've got a load of markets at the moment that are pretty much near their highs, aren't they? You've got the S&P 500 and NASDAQ. It feels like pretty much every day is either near its high or making a new all-time high. So we're heading into this earnings season, and you have to say it's risk on across the board. Obviously, you've got crypto assets that are flying. The sort of maybe the worry for markets, or for some people in the markets, might be just how well gold and silver are doing as well. But we can discuss all of that at the back end of the episode as well. We've had most of the banks from this earnings season. Of course, they unofficially kick it off each quarter. We've also had Netflix, we've had ASML, a few home builders, and by the end of the week, we'd have had two of the other big Magnificent Seven names. I mean, look, fair enough. It's still early days, I would say, but so far, are you liking what you're seeing? Would you say?
Yeah, there's been some mixed results, but I think there's probably been more positive than negative. I'd say ASML, you mentioned there, was probably one of the bigger disappointments to the market. You know, shares tanked, didn't they, after hours on the result. Netflix, pretty solid result, but there was plenty of optimism, I think, baked in. Shares were up, nearly 100% in the last year, which meant sort of shares finished slightly lower as well. So look, the banks were, pretty decent as well, especially those sort of investment banks, those banks that trade obviously quite heavily in equities, coming from, Liberation Day, the huge trading volumes coming through on those days. And, I think overall we spoke about sort of Jamie Dimon's comments last week. It was, I don't think they're always a little bit pessimistic, aren't they? Let's be honest. I don't think they've ever come out and really said how amazing and glowing the economy was going to be and that shares are going to rally, have they? So I think all in all, I think we take the positives away. For me, TSMC was a big win though. Massive result, so sort of huge demand, and I think that has sort of set the scene for big tech earnings.
Yeah, for sure. I mean, I was looking at the Netflix reaction, and I think when some people, I did a webinar on Monday, and someone was talking about Netflix, and they were like, "Oh, it was a good earnings report, but we're now lower, and should I come out of this position?" And it's always tough to answer that, because it completely depends on your time horizon. Completely depends where you got in. Like if you're holding Netflix from, the low of sort of 2022, and you're still up, a few 100%, and you've taken profit along the way, there's no need to get out of that position. Whereas if you bought a few days before the earnings report and it's a short-term trade, then yeah, you probably do want to exit that position. I mean, it was a solid report, and I actually tweeted the other day. It's like sometimes I just go on Netflix and I'm searching. I was like, this app is just full of absolute dross, but I'm never going to cancel my subscription. It's such a sticky product. Yeah. So it just feels like one of those ones that even if it has had a bad day yesterday actually in the market, and it's actually from its all-time high now, it's down over 10%, call that a correction. So it's one where, okay, it could come down a little bit more, and maybe it retests the previous high from February at 1060, and that might be a dip that people like the idea of getting into. But yeah, I mean, that wouldn't go in the winners column from the earnings report. I think that's fair to say. I'm looking at some of the banks. Wells Fargo finished down 5% on their day. Citi Group finished up 3.5%, 4%, but mixed mixed performance. I like using Finviz, which I think is a good free website, which I'm sure many of our listeners will look at, and you can have a look at the earning day performance of all the stocks in the S&P 500. And the greener it is, the more positive; the more red it is, the more negative. And certainly from the financials, it's a complete mix, really, between red and green. So there's no real clear sort of winner or winning sector out there at the moment. Uh, I would say, but we got some exciting stuff still to come. And also just bear in mind, speaking of Netflix, it's only one quarter. It's not going to tell us too much. So do have a little bit of patience. But of course, when making a decision where to stay in a stock or get out, you've got to remember the reason you got in and your plan and all of that. And that can only really answer you that question, I would say.
Yeah, like you say, it's one quarter, right? And I think that's the important thing. But it is the time to sort of reassess, reflect. Have the fundamentals dramatically changed from when you initially bought in? In a positive or a negative way, is it time to take profits? Is it a time to maybe add to that position? Does weakness potentially mean that you move more into the stock? Do we pick up a position at a better price, or is it time saying, okay, actually there's been a fundamental change here to that? We're about to sort of head into reporting season here in Oz. We only get it a couple of times a year, and every company seems to report within about a 3-week period, which makes my life hell. But it's one of them where also we're looking at sort of like what management are saying as well, right? We don't want to just sort of look at the numbers. We want to hear about, and see what they're writing, because, are they talking, are they investing into growth? Are they sounding confident? Is there optimism there? Because that can be really important in terms of, looking forward and what we can expect from a stock as well. So I think those are really key things to sort of look at, and of course things like dividends as well, that can be crucial. We're seeing dividend increases. That's a huge positive for a stock. Buybacks increasing, again, that confidence going back into a company as well. As we say, though, we're sort of just at the start, really, aren't we? We're just we are getting into the thick of it, but just at the start. Anything that's, going to stand out for you, Sam? What are you most looking forward to from earnings season?
I mean, if you rephrase that question and said, give me a one-word answer, the one-word answer would be NVIDIA. It feels like it's like get to the end of the earnings season. If we're down, okay, NVIDIA comes save the day. If we're up, let's push on and on. It still feels like that is the main event, isn't it? It's much like a heavyweight boxing card or a boxing card, and everything before that is just filling the fights, and we get to NVIDIA. It's the one we've all been waiting for, and at the moment it's not really disappointing. So that would be the one. I mean, I don't think we know the exact date yet of when they're reporting, but it's going to be at the back end of the earnings season. So that would be my short answer. I'm also, I mean, we talked about it, whether it was last week or the week before, that we're actually expecting it to be a half decent reporting season. I think it's going to be a case of quite a few companies would have under-promised because of tariff worries, and therefore, with it all being pushed back, maybe over-deliver. So I think it should be okay. We'll talk about Google in a bit. I'm actually really looking forward to that. It's up 10 days in a row at the moment, heading into that. So that would be interesting, as will Tesla. We'll talk about that in a moment. I think one of the most important things, and you touched upon it, will be, company forward guidance. We're halfway through the year, or just over halfway through the year. What are we thinking for the last 2 quarters? Does that change a lot? Is it still massive tariff worries? Is it inflation worries? Is it currency worries? I want to hear what they're thinking about the future. I almost think it's more important than what's happened in the last 3 months, to be completely honest. Obviously, that will change company by company, and of course, there'll be a list of 10, 15 stocks that I have on my personal watch list that I care more about than others, and that's going to be the same for everyone. But I think with I saw a stat, and I'll get it slightly wrong because I haven't got it written down, but the top 10 companies in the S&P 500 are now worth the most percentage-wise that they've ever been. So, for example, if one of those top 10 companies, or 3 of them report on the same day, and I think we have that in the future, at the end of the month, if they all come in bad, the market's going to struggle. So a lot of those are obviously big tech stocks. So I'm probably most looking forward to seeing what they do, to be honest. And if they're okay, unless we have something new that comes out, maybe tariffs or dodgy inflation or rate expectations, I think that we'll just continue the path of least resistance. I know it's boring to say and it's probably quite predictable, but AI and technology stocks is going to be probably my focus and what I'm most looking forward to. But yeah, company wise, it's most likely to be Nvidia. It still is, isn't it, Josh?
Yeah. I think it is, and it's that sort of bellwether, isn't it? Really, and although it comes
Yeah,
at the end of earnings season, it really tells us. And I think you can almost get an idea of what we're going to get from Nvidia from what we get from the other tech names, right? If you've got
yeah,
Alphabet, Amazon, Meta, Microsoft all saying, "Oh, we're spending more money on AI. Our capex is going up." Well, and you can pretty much almost say that Nvidia is, going to be taking a lot of that.
yeah,
So it's almost like you're sort of foreshadowing what you're going to get from Nvidia from what we see from those other big tech names as well. And I'll tell you what I do like from earnings season. I do tend to look at this as well, is the sort of analysis after earnings season, and it's like the most used comment. So it's like the word inflation was used 67% more this time
yeah.
around, or like tariffs would have been up, mentioned on 300 calls compared to 100 calls last time out. So I think it's always good to look at that. So I wonder if it will still be tariffs, or it might be, companies trying to use AI again to sort of come back to the front. Who knows? But either way, earnings season always keeps us busy, doesn't it? So
Yeah, if anyone's listening to this and loves all that data stuff, can you send either Josh and I just like the
yeah,
year-on-year comparisons of the words AI, inflation, and tariffs? It would be really interesting to see that year on year and quarter by quarter how it goes up and down. There's a little project for you, and you obviously get a shout out, which is what you
of
all want
course.
as well. I mentioned we'll talk about Tesla and Google. Let's do Tesla first. What are we in the 7th month? I mean, what a year, to be honest. 365 days. It rallied, didn't it, after the election? Then went lower after Liberation Day. Then went higher. Then went lower, and it's now stuck somewhere in the middle. It's a massive name, hugely popular with the retail crowd. What are we looking at heading into this report then?
Yeah, look, I think realistically expectations are pretty low, right?
Mm,
Vehicle sales are coming under
that's good then.
pressure. Global deliveries have fallen, down 30.5% year on year in Q2. That was below us analyst estimates. Look at the Cybertruck as well. That's arguably been a bit of a flop, really. 3 quarters in a row of falling sales, so hitting the lowest point in a year. So yeah, not a lot of optimism coming in, and I'm sure they'll face a fair bit of scrutiny. But I think what's clear is that they are a market leader. They're making progress on autonomous driving. Robo taxi program coming through. That's going to be worth watching closely. But I think the key thing there is meaningful revenue is going to be still many years off. But it remains a pillar of Tesla's long-term growth strategy, right? And its story and why investors are in it. And I think that reveal of the robo-taxi earlier this year, it was kind of positioned as that major breakthrough. It was good news for the stock. The market is going to want more, though. It's going to want more than promises, want more than prototypes. It's looking for progress, right? Its valuation, Tesla's valuation, still more than 20 times that of GM, despite delivering obviously fewer vehicles. And I think it does, as I say, we know now that it's not a car company, it's a tech company. It reflects expectations of transformational growth in autonomous, in AI. But if you continue to underdeliver, then that valuation gap becomes increasingly difficult to justify, especially if you've got falling vehicle sales as well. So look, I think Musk is going to have a very big call on his hands. We know that he's been distracted, whether that's from Doge, whether that's from him starting his own political party, whatever it might be. We thought he was going to be coming back. Now the political party is maybe something that is going to rattle investors a little bit. And I think he just needs to step up to the plate. Earnings are expected to fall 20%, 44
Yeah.
cents a share. Revenue set to fall 11% to 22.8 billion. You're at a time, right, where you've got weakening fundamentals. You've got those leadership distractions from Musk, as I say. You've got delivery shortfalls coming through. So it's a big call. It's a really, really big call for Elon Musk. And I think he is going to have to deliver, a bit of Musk magic if they're going to turn around their fortunes, so far in 2025.
Yeah. I mean, we go back 3 months and we had this conversation about Tesla, whether we did it before their earnings report or after. And I remember certainly reviewing it anyway. And it wasn't the most amazing report, but the share
Mm.
price went up and then continued to go that way. And again, expectations heading into it weren't great. So it is worth saying that sometimes it just needs to be a little bit less bad for price to push higher. I do think, it just takes one comment from Musk to really move the share price higher or lower these days quite significantly. I think so by the time it comes out Thursday morning, market opens, and so we've got couple of days left to the end of the week. I think the reason I mentioned that is just in terms of share price reaction. I think where we closed the week will be pretty telling, and it was with Netflix. If it closed below a certain level, you'd imagine that we continue to sell off, which is exactly what we've done. And with Tesla, I've seen a few people talk about it, so I know I'm not the only one. We're getting squeezed from both directions. It feels like a move is coming, and you often get that heading into an earnings report. So just purely looking at the chart to the downside, I would say, if we close the week below in below sort of 310, I would feel like maybe a little bit, below $310. I would feel that the next direction of travel will be continued to the downside from a sentiment point of view. If it was to be deemed a good report and continued move to the upside, and we finish the week trading above sort of 340, then I think the next move would be to the upside, and people would be looking towards 370, 380. Anywhere in between that is just noise, to be completely honest. And that's how I would see it. And sometimes, certainly for newer traders and investors, you get drawn towards uh, trading the news or the headline or the earnings report straight away. You don't have to. Sometimes just sit back and wait to see how the market actually digests it before you then make a decision, especially if you're thinking to get involved for a few weeks or months or whatever that might be. So for anyone listening to this and wants to know just from a charting perspective, I'll tweet it out later. But essentially, where we closed the week, low 300s, sentiment wise, not the most positive, and above 340, then that would be a little bit more positive. Let's wait and see where we close the week. Josh, Alphabet then as well, they report similar sort of time. I'm not completely sure who's reporting first, but it's going to be just after the market close for both of them, isn't it? So what have we got there?
Yeah, look, you mentioned at the start, huge rally in sort of the last week or so. It's the cheapest Magnificent Seven stock on a forward price to earnings basis. Few reasons for that, because you've got optimism around AI, but then you've also got this area of concern from investors about the long-term impact that AI tech might have on Google search, right? Increasingly, people are using ChatGPT or similar AI platforms to sort of assist them in gathering information and recommendations. And so I think that's obviously a risk. There's that sort of concern there that Google search is, their ad revenue is obviously going to decline. And then you've also got this regulatory pressure simmering in the background at the same time. We're expected to have a ruling from the DOJ about possible changes to sort of the structure of Alphabet following sort of an antitrust ruling against sort of Google search. So it could be a call to basically see Chrome divested from Alphabet, and that could really challenge its search dominance. And I think that is going to keep investors cautious. And I think that's why we're seeing that valuation as it is right now. And I think we'll get that until there's a little bit more clarity. Although a bit of positivity coming in, we have had a number of broker upgrades coming through in the last sort of, week or so as well. So brokers sort of quickly coming in, lifting price targets on the stock as well. And I think that's because they are in a good position on AI, maybe slightly slower to the market than maybe some had expected. But they are investing heavily in Gemini, which is its sort of flagship AI assistant. Anyone will know if you've Googled something recently, you have Gemini pop up and it usually gives you that summary. And it is pretty good because you've also got, ChatGPT that does something similar, but I just prefer Google. I'm not going to use ChatGPT to sort of use it. But they've also got AI-powered ad products, enterprise tools as well. And I think you've got this growing investor interest in monetizable AI applications. So I think really updates around that on search, workspace, cloud, that's going to be the key focus this quarter alongside YouTube and of course cloud growth. That cloud growth is usually the important one. That will be the focus, usually when you get Microsoft, Amazon and Google, focus is on cloud. And it's going to be how AI is contributing and that growth. Market is looking for about 27% cloud growth year on year, and a beat there paired with solid search performance, I think could help the stock, push higher even after this sort of rally coming in. So that will be something to watch, but that is going to be really key, right? We've had a big rally coming in, so expectations are going to be pretty high. The other thing we're going to watch is capital expenditure. I mentioned it at the start around Nvidia and big tech increasing money. But big tech they're in an arms race, right, to scale infrastructure for AI. And Alphabet's in there. They're right in there. We've got demand growing rapidly for AI. So I think full-year CapEx could grow once again, because ultimately, in this environment, it's either spend or get left behind, right? That's sort of the bottom line. So I think we'll see it pick up. Meta just announced a huge I think AI data center somewhere in the States. So it's mega data center, I think they called it. So it'll be really interesting to see how, everyone's spending. And as I say, I certainly think we'll see big tech increasing CapEx across the board.
Yeah, just while you're talking about Google there, and we mentioned at the beginning, it's on a good run at the moment, 10 in a row, I think it is.
Huge.
But yeah, I was just having a quick look at the high to low, so the previous all-time high of beginning of February. We dropped 32%. You just think, imagine that, you know, in April. I know it was the case for a lot of markets, but one of the biggest companies in the world, you got a 32% discount. Amazing, really. Again, hindsight says it was a good opportunity, but I like it. I like the look of the chart. I like the way it's pushed to the upside. In terms of key levels, where there'll be some people that look at this and sort of see reverse head and shoulders. I think if it finishes the day, the week above $192, I'd be surprised if it then doesn't go to all-time highs. Just from a purely sentiment point of view, again, it's not investment advice, it's just the way I would see the chart. If it's a not amazing report and there's a few worries and guidance isn't amazing, this, that, and the other, below $181, you on a weekly close, you'd be a little bit more worried and actually feel like, okay, now we're actually we're gonna unwind some of the gains that we've had since those April lows. So yeah, 192 to the upside, 181. So favouring the upside move at the moment. And that is one thing to say as well. Whenever you have a earnings report, whatever company it might be, and let's just make up a scenario here. Let's just say everything looks good for Nvidia, and we know Nvidia's reports are in, let's just say, 3 weeks. Nvidia's share price is going to go up into that. And then if that report isn't as good, the share price will come lower. Or if it's exactly in line, buy the rumor, sell the fact. So with companies, especially if you're looking to get involved in a shorter term, do look at the chart, see how it's trading into that earnings report before making a decision. Because obviously what is priced in, what comes out can be two slightly different things. Let's just wrap up the poddy by discussing what else could be of interest, because certainly today, Tuesday and Monday, I was looking at the market. It's quite quiet, really, from a macro point of view. There's nothing right now that's coming out. Obviously we had inflation last week in the US. That's always big. Non-farm payrolls a few weeks ago, and the Fed. We always was thinking about September at the moment. So it kind of feels like earnings are going to be the main driver right now. But then I guess we're getting to the point, and certainly overnight we had a tariff update. So anything around that and August the 1st deadlines, is it going to stay? Is it not? Are there going to be new deals? That's going to be another thing I think we can chuck in the mix there as well. You've got VIX seasonality, which we talked about for a while, but in theory, if it follows the seasonality chart, then a spike could well happen. It would take us back to August last year with the Japan carry trade. We saw a move lower in August, quite violently actually, albeit it was brought up on the Monday. Also, September, historically not a great month for stocks. You've also got the US dollar. I saw this morning there's a death cross on it, which sounds very scary, but it's actually marked, the last 2 times it's happened, it's actually marked the low of the US dollar before a recovery. So keep a watch on that. I'm not saying that you're going to get dollar strength, but one of the other sides of that is if you expect dollar weakness to continue, gold and silver could well continue to push higher, and Bitcoin certainly priced against dollar will continue to push higher. I'm not necessarily sure I'm of this whole US dollar debasement trade. That's the reason gold and Bitcoin are flying higher. But some people do, have that on their list. But those would be, things immediately I'm thinking about. Obviously, rate cut expectations. Anything else, or are you sort of like, yeah, it's earnings for now, and it's everything else just for a little bit down the line?
I mean, yeah, earnings usually do take that sort of center stage, don't they? Really, I think the tariff, deadline August 1st will be really interesting to sort of see how that plays out. Whether we'll get more commentary from companies around that time. I read today that there's ships and ships and ships trying to get into the US ahead of August 1st. So, how does that then impact inflation? When those tariffs do coming in, how does it impact company earnings? I think you mentioned it the other day, about sort of, bringing in,
front loading it all.
selling ahead and those types of things as well. So that will be really interesting. And I also think crypto is really starting to cook up, really kicking up. You had that move from Ethereum, back to sort of 3,800, really broke out that downtrend against Bitcoin. Been waiting for a long, long time for that, haven't we? And there's just lots of optimism within crypto at the moment. So that's something I think I'm going to be keeping a close eye on. And that just really makes it feel like risk on. And the other thing I think to keep an eye on is, you mentioned this, I think you put this out in a tweet the other day, and I almost did it yesterday as well. And that is screenshotting the portfolio. And as I went to do it, I went, is it time to take a few chips off the table there? So that is something to we spoke about it on the podcast the other day. All-time highs aren't a reason to stay out of markets or to get out of markets, but something to be wary of, right? Because it's so good at the moment. Everything's risk on. Bitcoin at new all-time highs, S&P at all-time highs, ASX, everything's at all-time highs. So I think there's a level of caution to be had.
Yeah, it does feel like that moment where you're just like, oh, that looks good. Let me get a little screenshot of that. And
shouldn't be doing that, should I?
No, and anyone that's been around long enough will know what happens when you do that. It's funny, it's crazy. Literally, you do a screenshot, you ain't the only one doing it. Sometimes it does literally mark the top. But fingers crossed for anyone that's screenshotted already that it's not going to be this time. And also, by the way, any dips. It's a lot of money in money market funds at the moment. I think the highest it's been ever. 7-8 trillion just sitting there waiting to, in theory, buy a potential dip. We'll have to wait and see if one happens. Joshy boy, thank you as always. And we'll be back.
Pleasure, guys.
Next week.
See you next week.
Take care.